we think the opportunity certainly is strong, and that's been part of the design from a Seven Group perspective. As a conglomerate, we are active in the portfolio shape, and we have orientated towards industrial services with the addition of, we bought the other half of Coates a number of years ago, and that's continuing to grow. And Boral is a new addition we think plays into that construction and infrastructure sector. And you touched on hundreds of billions, but if you look at the next 5 years, there's 1.1 trillion that is committed across construction and infrastructure in Australia. The couple hundred billion relates to government, but we think it's a really strong dynamic that will further support the Australian economy and productivity. So we think having that exposure across the parts of the group is a really exciting opportunity.
In terms of that as well, obviously we're expecting quite a significant amount of tightening coming through across the world. But in terms of Australia, there's obviously, I suppose, less impetus to be hiking rates. Do you think that that's also a tailwind in that respect?
Well, we suspect as we start to see inflation drivers come through, there will be a response on rates. Fundamentally, the growth dynamic in the Australian economy is probably the part that we've been more enthusiastic or more encouraged by. So we've seen these drivers towards inflation, supply chain issues. Those factors are playing from a period of economic growth. And that's what we've seen really support the economy. And that's having an impact from an inflationary context that the tight labour market will play through. So we don't see that as a fundamental concern. As long as we're positioned for it, we think this just becomes part of the now normal part of business, where inflation is just a factor of business, and we do see revenue growth as a byproduct when you can position your business as well.
So you think inflation is actually bedded in now, Ryan? This is Tamor, by the way. You think inflation is bedded in now, and if so, at what rate? I mean, do you see the stagflation threat that people are talking about?
We think that the primary driver has been one of activity. So we've seen a massive global stimulus from all the COVID stimuluses from governments around the world. That's playing into activity. We think that's been the primary driver on the supply chain aspect, because it has come from strong underlying demand in each economy. In Australia, we've seen this step up in economic activity. Most sectors have been enjoying that. The labour tightness is a byproduct, because as organisations grow, we're similar to others. We have a number of open vacancies to deal to growth activity, and so we see that from a position of strength. The inflation factor is probably what we consider more reversion to normal. I think the last decade or so has been a relatively unusual environment to have such low inflation. But as we go forward, inflation is not an inherent challenge as long as you've got economic growth and you can manage that with balanced economic policies.